see that on YouTube. So we are here in trading view. Order flow literally is to check on how the market is moving, or what you expect, or where you expect the market will move. So it's a good thing to start from there. And I know that we will have a great night. So where do we start? I think we can start here. Sorry, you cannot hear me. Okay, just a minute. Good, you can now see my screen, eh? Perfect. Order flow. A lot of people want to join. Good, so we are here. You will be able to see the few setups we've gotten today. I have people in the Elite group that have gotten a few trades, and so we will just look at the overall what is happening. So okay, so you're going to combine order flow and the psychology of the week. I think that will help us to understand some of these things. So let's see what is happening in the daily. Now, when we say order flow, what we actually mean is how is the market, how is the movement in the market, and what do we expect in such a market. So I want you to look at this. This is the daily time frame, just to get a picture of what is happening. So we were down first on a downtrend. You can look at this. We have this. We are making a series of lower lows and lower highs. Okay, when we got here, we did not make any more lower low, so the market started to move in the opposite direction, like this. And if you look at this, because literally this was our last trading range, this one. Okay, what is happening now? Oh, this is the guy I'm looking for. You see this one, because this is the range that took out this liquidity, or that took out the previous low here. Okay, and we already know that after every change of market structure, a new trading range is formed. So what really is order flow? Order flow is how the orders flow in the market. For example, in this small cut down trade here, okay, or let us just take this example. This is an up trade because it has broken, it has changed character here. So the market is doing a series of higher lows, you can't see my screen. Okay. So we are making us volume is down. All right, let me see. So we are making a series of higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. But I want you to look at something here from this point. Okay. So if from this point to, let's say, this point here, because this is what broke structure here, so this is that move from here to here. So for us to get a perspective of the next move, we will need to look at this. Okay, so this is what you do to understand the order flow. You take the gun box, okay, the gun box here, and run it from top to bottom, or from bottom to top, whichever works for you. Now this is the daily time frame, but this is what happens in the market always, and this is how you spot liquidity. So this is how you spot liquidity. Once you do something like this, you know that it will be easier for you to know where do you expect the market to come to. Okay, so someone wants to join. So we know that we buy from the discounted price and we sell from what? From the premium price. So what we expected this market to do, once it gets to this point here, we expected that the market will come back to a discounted price, then continue to go up. Okay, but what the market did was it retraced back to this level, and then it broke structure. So what a trader will do is you will come and mark this as your order block without knowing that this is inducement, and this inducement will be taken out. This inducement will be taken out. So what we expect right now, and why we are selling the market, is because the market has not yet taken an order from the discounted price. So this market must continue to come down until it gets to either the equilibrium or where we have the discounted price, so that it will start to rally up again. So that is how you build buyers from the higher time frame. We could have started with monthly, but I don't think it's necessary for now. So what do we have now? If you have a writing material, you can write this. In the daily time frame, what we see is that the market is retracing to a discounted price. So what we are trading now is we are trading the retracement. That is why those of you that are in the other group, you see every attempt we attempted to buy failed, because right now the market is not supposed to be buying, it is supposed to be selling. Okay, so we move from this level, we now come to where the market is currently, and that is where the market is, because this is the move that broke this structure. But we know that this is our future inducement. And inducement is also what we call what do we call this now? Liquidity. So we know that before this market comes back here, if it breaks this low, can you see this low? If the market breaks this low, it must break this low, because this low is inducement. All these buys you are seeing here are just inducements. These are not the real buys. But of course this is the daily time frame, but I wanted us to build that bias. Background iwe white. Shida watu wa TikTok hawanangi white, but I can still do it so that, but I have already changed everything to reflect the I'll try to zoom it out so that you can see it well. Okay, we can now come back. So what you are seeing here is that this is what we are targeting, that the market is coming to take. It is coming to take this low. So what do we do? Right now we know from the trading range, this trading range here, from here to here, we know that we are supposed to be selling. Why? Because we are in the discounted price. So we move from here, we now go to where the market is, and that is where the market is. So this is where we are currently. This is where we are currently. So I want you to look at this, that the market has been doing, this is lower low to lower high, lower low to lower high, lower low to lower high there. Then we have lower low to lower high. So what are we expecting? We are expecting the market to make a lower low. That means we have a trading range. We have a trading range. After every break of market structure, the market does what? Creates a new trading range. So we can remove this and all these others. And now we concentrate on the move that broke this structure here. Which is the move? That move is from just a minute, let me get so we have this one here, okay, to here, to that point. That is our current trading range. Like, this is the trading range that is causing all the movements that you are seeing in the market right now. So our work, following our higher time frame bias, is to look for trades that are around this range, knowing that we are targeting this low because the market is bearish. I hope we are following. We know that the market is bearish. So what do we do with this? And I've seen someone ask, how do you determine whether the market is uptrend or downtrend? For example, when you look at this market, we were in an uptrend here, a small uptrend here. When we got here, the last low was broken, this one. But we cannot determine that this is a downtrend until this low is taken. Okay, so we went back up, came down, went up, came down, went up, until now this low was taken. Now that tells you that the market has shifted structure. We are now in a downtrend. When the market takes the previous protected low, the market shifts to a downtrend. When the market takes the previous protected high, the market now changes to an uptrend. Yeah, that is how it is easier to do that. So are we here? This is now our trading range, from that high to this low. So what do we do? This is a protected high. This is a protected high. Why? Because this is the high that took out this external range liquidity, or this low. So we don't expect that this market will come and take out this high unless the market changes character or shifts now to an uptrend. So we don't expect this high to be taken, but we expect that this low should be taken. Are we together? So what do we do from here? We move to a lower time frame, and that is 4 hours. We move to a lower time frame. We move to a lower time frame like this, and now we want to start looking for opportunities to enter the market. Let me delete all this so that you'll be able to follow. We want to look for opportunities to enter this market, and we are entering this market targeting this low here. So that means if you want to win in this game, if the market is a downtrend, unless you know completely what you are doing, don't look for buys, look for sales. So today I knew the market was in a downtrend, but there was a retracement that was happening. So with my people, we did a few buys, but most of them did not work. They did not work because when you are in a downtrend, order flow demands that you look for sales. Order flow demands that you look for sales. Now look at this. So this is what order flow really is. So the first thing we need to look at is where do we have order blocks? Where do we have order blocks? Where do we have order blocks? Now this is 4 hours, so this qualifies to be an order block in 4 hours. Okay, as we continue, I'll show you how we try to refine order blocks, because in a lower time frame this is not an order block, this is liquidity. Okay, but now we are in a higher time frame. So this is what happens when an order block is mitigated. Okay, when an order block is mitigated, either with a wick or with another order block, money leaves that order block and moves to the next order block. Okay, have we gotten that? When and if an order block is mitigated, when an order block is mitigated, money leaves that order block and moves to the next order block that either it's either a wick or an order block that mitigates it. Okay, that mitigates it. So let me zoom this out a little bit. You see what we are doing? This is what we are saying. Before we continue with this move, before we continue with this move, I need you also to do something and check something here. I need you to check something here. If you look at this move here, market came, broke this low, retraced, and well, this was a liquidity sweep, but still works as BOS. That one. Can you see that one there? That one. So this will tell you that we also have another scenario that can happen in this market. We also have another scenario that can happen in this market. And what is the scenario? The scenario is the market will come to a discounted price and buy. Why will it buy? It will buy to take out this liquidity. And the reason you want to know whether it is liquidity or not, you take a gun box. Take a gun box, run it from up to down here. Can you see that this buy did not happen from any significant order block? And then it did not happen in the QML level. This is the QML level, that one. That means that at the end of the day, before the market takes this low, the market must first sell from the QML level and from the premium price. But I need you to know that this is the market, and we have a lot of market makers, and they can make a decision. So you can see something like this. This will, the liquidity being swept, and then the market goes back up. Okay, so I'm telling you this so that by the time we come up with a sentiment that this is what we are doing, you will understand why we are making that decision. So we know that for now this is a protected high, but it is still liquidity and it can be taken out, especially if there is news. This is now important. If we have, maybe let's say there is news, those news that don't really respect any strategy. Respect any strategy. That is the time that you can see that like this one has been taken out and then the market continues to move down. Someone is asking what is QML level. So you'll know the people that did not come to my class. QML level is Quasimodo level. And what we said Quasimodo level is where we have the stop hand. Where we have the stop hand. Like this was the last break of market structure going up or going down. That is what we call Quasimodo. And you check Quasimodo using the line chart like that. The line chart. So you will bring this one maybe around here. The line chart. Okay? So that is how you know the Quasimodo level. So we need to know, we need to understand something. Did this market sell from a Quasimodo level? Where is the Quasimodo level? You see the last, this last buy before the significant sell. That one. That is what I'm talking about. This thing here. This one. That is what I am talking about. That is what I am talking about. That means that it's a possibility that this is POI. There is a possibility that this market will come back here. But I need you to follow me. But this market cannot come back here unless it buys from a discounted price. And where is the discount? What is in the discounted price? You can see there is another QML here. Can you see that? There is something else there. This was the last break of market structure before the market started moving up. This was it. This was it. Okay? So, we have two scenarios that are happening in this market. We have two scenarios that are happening in this market. One, the market can come down, move up, and then come down again. Okay? And why is that the most probable scenario? Because the market did not break this high, the market broke this low. So, do you understand why we are bearish in GBP/USD? If you got that, please give me a thumbs up so that I know we are together. My God. So we are getting the point. So that is why we are bearish. That is why we are looking for sales. We are looking for sales until around this area here. Because this is the area that we have the QML. Okay? Perfect. So where are we? We were here. We were looking at the order flow. Order flow. Order flow. So we got our POI here, or our order block here. If you can take this order block, this one was mitigated by this order block. This one here was mitigated by this order block. Mitigation means market came back to retest the order block. Okay? Market came down to retest the order block. Now this one was mitigated by this one. Can you see that? No, if you see that, please show me so that I know you are getting what I'm saying. Good. Good. So, the order block that we currently have is this one. That is the last buy before a significant sell. Okay, now this is what you check. We said that for an order block to be valid, it must answer some few questions. We said one, has it swept liquidity? This one has swept liquidity. Okay, has it broken structure? This one has done what? It has broken structure. Does it have an FVG? This one have FVG here, like that. So someone would ask me, why did this market buy from the or sell from the FVG and not the order block? Why did this market sell from the FVG and not the order block? I want you to look at this one. Because an order block must be a stud alone. A stud alone. You see this wick here? This wick is the wick that mitigated this order block. That wick there. That is the wick that mitigated this order block. That means money is now no longer in this order block. Money is in this wick. This is the wick that has this money. But now you need to check something. Where we have the wick, what we have down is an FVG. And this FVG will be taken out. Yes, this high is liquidity, this one. And it will be taken out. So what I'll be looking at in the future is if when the market comes to that wick, I trade at 0% and my stop loss at 50%. That is what I'll be looking at in the future. That is what I'll be looking at in the future. But let us see where is the market currently. So the market has taken a POI from the wick and it is coming down. It is coming down. What you can see here is literally, this is just consolidation here. This is consolidation. So the market will consolidate, and then it will start to go down. It will start to go down. So look at this. So that means if this market took a POI from the FVG, remember this is unmitigated now, but the market took from the FVG. So before we get here, where else do we have, where else is the money now this week? Now that week has all the money that was in this fair value gap. When I mean money, you know that in fair value gaps, it is a magnet, it is liquidity. It is magnet for market makers. Okay? So that means this is another future POI that when the market comes here, I will take this from the 0%, where will be my stop loss? 50%. And there is very high possibility that the market might not come back here. Why? Because the order block here has many orders than this one. So though this is a good POI, there's a possibility when the market comes here, it will be taken out. So this is the order block right now that has all the money. And it is where the wick is. And you use the gun box to know where the 50% is. I've looked at charts. I'm even that accurate. So do you get the point? This is where the money is. Here. This is where the money is. So as we speak now, this is a very high possibility. That's a very high possibility. Because where is the market selling from right now? Where is the market selling from? Now, if you take this high and that low, can you see where the market is right now? You can see where the market is. But now, if you check, there is a wick here. This wick was mitigated by this wick here, okay, because this is the one that took the 50%. No, it was actually this one, and then it was taken out. So what do we expect? We expect, because there is no other money hapa, hakuna pesa hapa, there's no money here. So what we expect is the market must come to a place that has orders. Take an order from there and then move up. So that explains why we are selling this market. That explains why we are doing what? Selling this market. So where are we selling it to? We should sell until where we have our next POI, or where we have our next liquidity. For example, this swing low here, that is liquidity. So you can sell until here, then wait for the market to come to your level, and then look for a change of character and enter in the retest. Okay, so that is the 4 hour. So we need to refine this further to this trading range here. We need to refine further to this trading range, because when I am trading, because we are intraday traders, you want to trade where the market is currently. If you are a swing trader, you can wait for days until the market comes to your level. But now we are not swing traders. We are day traders or intraday traders. So we have to look for at where the market is currently. But remember, we started the buyers from the daily. That means we are ready for what might happen, the eventualities. They are called eventualities. So this is where the market is currently. If you can check, this looks like a bit of consolidation. This looks like consolidation. So what do? We go to the 3 hours. And there is a way a trading range. It is called BOB at BOB. A BOB is when the market breaks the previous low. A BOB is when the market breaks the previous high. As simple as that. Simple as that. Not difficult. Very simple. All right. So can we see where the market is currently? What I see is that the first thing the market will do is to take out this low. Poof! Because these are equal lows. And equal lows it's a magnet for the market because it is liquidity. Equal lows are a magnet in the market because they are liquidity. But I want us to now refine this entry here. So as you can see, we have this BOB here, or order block hapa. We have this order block here, and the market is selling, and it is not selling from our order block. That is why you can see up here, leo imetuchezea share hii market hii. When you look up here, there is a lot of liquidity resting above that place. A lot of liquidity resting above that place. What is the liquidity? You see that these relative equal highs here, and then this is the Asian ridge high. You see this box here. this box. This is the Asian range high. So we have the Asian range high up here, and then we have relative equal highs. Relative equal highs. That means there is a lot of liquidity resting above this place. And why is the market doing that? Why is the market doing that? I'm sure there is someone here already who have marked this as an order block. Those of you that are following from TikTok, do you have a culprit? This is Gio. Do we have a culprit? A culprit. Yeah, I can see we have a few. We have a few culprits. So someone has already marked this as an order block without knowing that what is resting above that order block is a higher time frame order block, and not just a higher time frame order block, we also have a lot of liquidity. A lot of liquidity. Now, this is how we do our maths as traders. You need to know. Let's say, for example, the market needs to come and take out this liquidity. Where should the market come from? I know the guys of support and resistance, and it is part of even what we are studying now. So if the market needs to take out this liquidity, where will the market come from? Do we have anything here that can push the market to come up and take this liquidity? Now, from where I see it, I do not see anything here. The only thing I can see is this breaker block that has been retested several times. This one. That means what you are supposed to be looking at are opportunities to sell until you get to the POI. It is when you get to this POI that the market now can come up, take out this liquidity, take out this liquidity. That is the only chance I am seeing that will make the market come this high. So what do you do then? Once you understand that, the next thing you want to do is to look for what? To look for entries. You need now to look for entries. Now, by the way, where the market is now is very risky. Where the market is now, it is very risky. It is very risky. But let us see in this area here. You see this area, because this is 3 hours. Let us see whether we can see an order block that can lead for a buy to this point. If we don't see any, we still need to sell this market until this point. Because what the market is doing is that it is selling from by the way, I'm not hearing you because I don't have my earphones on. Yeah, please, if you want to talk, just raise your hand. So we need to look for an opportunity here. If we don't see any order block that can cause this market to go up, then we only need to look for sales. And we will need to ask ourselves, from where do we take that sell? Okay. All right, so let's move to the 1 hour. This is the 1 hour. When I look at the 1 hour, I still cannot see anything. I cannot see anything. This is an order block, but it is a risky order block. Because actually this is the order block that caused this buy here. You see this buy, about 30 pips. But it could have worked if only it broke structure here. Then we could have retested, take from the order block, and then move down. That is the only way that order block could have worked. So from where is, and you see all this noise here is because of this order block, all this noise here. But look at this, this is liquidity below the order block. Okay, this is liquidity below the order block. That means that order block cannot work. That order block must be taken out, and it will be taken out. So then what do we do now? We look for sell opportunities. We look for sell opportunities. How do you look for sell opportunities in 1 hour? Wait for this market to take this, then get the sell opportunity from a retest. And from which order block? The most recent one is this one. The last buy before a significant sell. Of course, you'll have to refine that to the body. You'll have to refine that to the body. Okay. You see that? So, unless, because this is how you trade, unless and until this is taken out, you cannot look for sales. Okay? Unless and until this is taken out, you cannot look for buys. Unless now what you are looking for is 10 pips, 20 pips, something like that. That is the only time that you can trade this market. So what we expect is either the market comes, takes this out, retests, comes to the POI, sells. If not that, the market comes, takes out this high, this low, sorry, retests, and then continues going down. So with this, I'm thinking we have a good place. But I also need to show you something about the order flow and the psychology of the week. Let me show you something. Now we have this, our order block that is not okay. This is what we are using now, because this is what is causing this, some of these sales. Now if you look at this order block was retested by this week. So as we said, money left this order block. Let me try to use something that I hope you can now see well. Money left this order block to this week, this one. Can you see that green wick? This one, here. So money left this order block and came to this week. These are the two ways we trade the week. We trade the week at the base and at the 50%. So what do? You take the gun box, run it from the top to the bottom of the week. Okay? Now this one tells you that this small sell that is happening from the base of the week. Okay? From the base of the week. And it has sold about 24 pips. So there is one more thing we know. Okay? That this market will come to the 50% of the week, sell from there, and sell I don't know how many pips. So this is what you can do as a trader. Now that the base has been taken out, okay, the base has been taken out, but the 50% has not been taken out, because if the 50% has been taken out, the week that takes out the 50% now has all the money. But as at now, this Wick still has money. So especially as an intraday trader, you can look for a sell opportunity from here. So we refine this area to see what we have and what we can use to take a sell. And the sell you take, let it not be more than 30 pips. Because remember, we have liquidity up here. So this can be taken anytime. But the market must react from this area. It must. It must. It must be. So those who are asking which pair is this is GBP USD. I see a lot of people have become liquidity on TikTok. We said if you cannot spot liquidity, you are the liquidity. You are the liquidity. So my friends from TikTok, you are the liquidity today. Me with my people, we also became liquidity on gold. That is why I don't like gold. Gold is not for the faint-hearted. So we also became liquidity, but it doesn't matter. It does not matter. We continue anyway. So we want to refine this entry so that we have an entry here. So I can just remove this. This is what we want to refine. This is what we want to refine. This is what we want to refine. So what do? We move to the lower time frame, 30 minutes. And this is what, by the way, this concept is the one I used to send my people in the group. And we got some few dollars. Not much, but we got something. We got something. So this is liquidity and it will be taken out. This is what we call trade line liquidity. This is what we call trade line liquidity. That one. So that will be taken out. So 30 minutes. Do you have anything? I can't see anything. So let's see what we have in 15 minutes. Because there must be something. Now, do you see that it is making sense? We now, because, let me do the nene again. That is where our gun box was. Now, if we refine this, if we remove the gun box and refine this, there is something I can see. Now, there is something called demand and supply. Demand and supply. Who understands demand and supply here? Demand and supply. Good. Demand and supply is not the same as order blocks. Because in this case, this is our order block here. Okay? That is our order block. But in this case, this, you see this small red candle here. This is our supply. This is where the market makers came in and then caused all this move. That is what we call demand and supply. That one. So we are getting somewhere. So how do you trade this? You can trade this as the wick. You take the trade at the base and then stop loss at 50%. But that is not something I recommend now. This is what I recommend. What I recommend is you refine this. Actually, let's go to 5 minutes. Let's see whether we get something. Perfect. Can you see this? So I wanted to tell you that you should refine this to the body. Like that. So we need to know what is here. Or why did I say that you should refine it to the body? So for you to understand this, go to the 5 minutes. Look at that. Look at this. This is witchcraft. Look at this. Exactly where we have a biob or another blow. This is a biob. The last buy before a significant sell. I told you these things looks like crazy. And we can continue to refine this further. And do you know why this can be a good order block? Because we have FVG here. And FVG must be taken 100%. You cannot trade FVG if you have demand or supply. Either, okay, if you have supply in this case, up here. Because now this one will be taken out. So, we need to have a trade that is about 3 pips. Let us see what we have here. Woo. I'm even putting a limit order on this. And that is how today's class is over. You have helped me to get something. You have helped me to get a setup. Now, I don't know which year this setup will work. But this is a setup I don't want to miss. Look at that. That is 2.3 stop loss. So for you to be conservative, you can do a 3 pip stop loss there. 3 pip stop loss. So with a standard lot, this is a mere $30. With a 0.5, this is what? This is $15. But now this is my advice. If you do 2.3 like that, target just 1:10. Target one. Don't be greedy. Don't be greedy. Okay, I want you to look at something. If you target 1:10, let's say this market reacts from here and then it wants to go up and take out this liquidity. Do you know what will happen? The market will come, tap your POI, then what do you see here? There's a breaker block. Then it will come here and continue. So you try to target where you don't have a major wahala, so that at least you get something. I think that's okay. That's a 1:8. 1:8, it's not a very bad trade. 1:8. So, can you now take that as a signal from me for tomorrow? A signal from me for tomorrow. If this market comes, and you see, sometimes it's good to know. If this market comes, let's say, because it will do something like this. It taps. If by any chance it takes this low, the low that will be here, it then retests and takes this low, you can now hold it to the last swing low. That one will hold if that happens. But if it just comes like this and then makes one crazy move like this, that is inducement. That is inducement. So I think we have something. Okay, let me teach you also something about support and resistance. I saw this today as I was trying to analyze and asking myself, what is happening today? What crazy thing is happening today? What is happening? What is happening? So if you can look at this, this looks like a consolidation. Okay, this looks like a consolidation. That means what the market is not taking out these highs, because if you can look, if you can see, it is from here. This is 1, 2, 3. 3 times the market has tried to break this high, and it has not been able to do that. It has not been able to break this high 3 times. Now, if you look at something else here, let me leave this. If you look at that place, the market has come, it came here, went back, came here, went back again. It is there now, and it might try to come now to our POI. If not that, because we have another block here, we have another block down here, and we also have FVG. This will be a good place to buy from, this area here. And you see, that is where our take profit is. I'm actually taking this trade, not the trade itself, but the order limit. I'm taking it. I'm taking it like that. So I'll come here and take. There are trades that I was taking that I did not say in the group because they are risky entries. You know me, I'm a risk taker. I'm a crazy risk taker. Taki mseme nilikula pesa yenu. You see that? But now we will refine this. A 7.8 pips trade is an expensive affair for me. Look at this. We have like a breaker block here, but we also have another block here. Another block, because the breaker block might be taken out. So let's see what we have here. 5.3 is still expensive. That is still an expensive trade. So we have a QML here. This is our QML. I think it would be better if we look for an opportunity from the QML. Okay. Looks like it's just our breaker block that will work. Holiday. Okay, let us refine this. Breaker blocks are good, but they can send you to the village. See, now we can. It is exactly at our QML. So if you can, also take that as a what? As a signal. 2.6 stop loss. 2.6 stop loss. So that is if this support and resistance will be what do we call it? Will be respected. If it will be respected. If it will be respected. And for you to know that I'm a serious person, I'll just come here. I will come here and do what? And put a limit order. Why is this thing hanging? Oh, you can't see my screen, eh? Don't worry, you are not supposed to see because I'm taking a trade. I'm taking a live trade. No, don't buy, just put another limit and leave it like that. If anything happens, it's not me. I told you I'm a risk taker. So if you don't have shock circumsober, if you lose a trade and then you start speaking in tongues, don't take this one. Actually, the people in the group, don't take this trade. I'll give you signals tomorrow. This is my own. Only me and me alone. Only me and me alone. Only me and me alone. I'm almost done. Actually, do you have any question? Because I think I'm actually done. I think I am done. I feel like I am done. If you use 0.5, there's someone who is asking on TikTok. If you use 0.5, it depends. It depends on the pair. But if you use the normal pair, at our target is like how many pips? Our target is like about 40 pips. That is 400 divided by 2. That is 400 divided by 2 by 2. So that is what you will get. That is what you will get. Oh, I've made also some money. Okay, good. So, do you have any question? Do we have any question? Any question? Do we have any question? So, if we don't have any question, you use lower time frames for entry. Lower time frames for entry like 5 minutes, 15 minutes, and then for exits use like use something to do with from 15 minutes you can see an exit. Look at where you have the next liquidity and then exit from there. Then exit from there. So I think we are done. We are done with that. So the only people I want to remain here ni wale watu wa elite group, so that we do some 1 or 2 things within 2 minutes. 2 minutes only and we are done. Actually, let me resend you the another link so that we join. Good night.